Okay, everybody, it's me, Gregory Mannarino. It is Thursday, March 4th, 2021. Well, here we go. Let's start off with the economic news that we got this morning. Another 745,000 people applied for first-time unemployment benefits last week. 745,000. This is a weekly occurrence. It's an incredible thing to hear. But that's where we are. It gets better than that. U.S. productivity is negative. Negative. Meanwhile, you can't make this up. You got the financial channels, their so-called expert commentators, trying to tell you that the U.S. economy is on fire. It's so strong. It is on fire. You can't make this stuff up, people. I told you my take. They're saying it's on fire. When I heard that, I actually started cracking up. I'm like, yeah, it's on fire. It's burning down. We're not even close to a bottom here, people. I think you know that. This is going to get worse before it gets better. By design here, the Federal Reserve is not done. They're not done buying everything. And the fact, here's proof, positive, that our economy is not on fire. It's not booming. We have a Federal Reserve here that is talking about, again, further rigging of the debt market. More stimulus from the freak show that is supposed to be our government, which is not our government. It's the banks. You know that, we need more stimulus. We need this. We need more debt. But we're on fire. We're on fire. Can't make it up. It's an impossibility. But what else would you expect in this New World Order freaking shit show? That's all I have to say. Okay, so let's move forward here. That 10-year yield right now, 1.48. Now, if you remember yesterday, we stayed in a tight range. We've been in a very tight range this entire week thus far. Now, like I had said, we need to understand the relationship between the dollar and the 10-year yield. If they can keep the dollar weak, the market will tolerate a 10-year yield higher. How high? It looks like the cutoff here is about 1.51, 1.52. The market starts to really hate it. But the fact that we just got abysmal economic news is enough to boost the market. It means to the market that the Fed is going to do more. See, the market is retarded. The market must keep every day getting reassured that the Fed is going to do more. Why do you think, for example, they parade out Fed president after Fed president after Fed president to tell us all what we already know, that the economy is bad, that they're concerned about the volatility in the bond market? Why do you think they do this? Why they have to say, don't worry about it. We're going to keep printing. We're going to keep issuing more easy money. The market has to consistently and constantly be reassured that the Fed is going to buy it all, that the Fed is going to backstop everything. That's the only driving force here. Again, we have an economy in free fall. Earnings don't matter. Forward guidance doesn't matter. Nothing matters at all. It's all about easy money driving this market higher. It's a hyper bubble. You know that, built on the back of a Frankenstein monster. And that is the debt bubble. And they're not done inflating it by a long shot again. Look at the Fed's balance sheet. Just open a new search engine. Federal Reserve balance sheet. Go look at it. It's gone parabolic. 100% increase from last year. It's an incredible thing to see. And they're not done. You're not supposed to know these things. You're not supposed to know it. Central banks around the world doing the same thing, people. Just do a little research into this yourself. All right, despite this, we got cryptocurrencies under a little pressure right now. Gold and silver are under pressure right now. You know what? I forgot to look at crude oil this morning. I don't even know what crude oil is doing. All I do know is they're going to prop it up. Crude oil right now, I don't care what the price is. It has no bearing on reality whatsoever. It's being artificially manipulated to the upside to prop up the energy sector and the financial sector. You know how this works. It's a game. It's so twisted. It is so sick. What else would you expect here? And I understand, believe me, why people are so concerned about, oh, Greg, when's the market going to crash? I don't know, and I don't care. I covered this yesterday in an interview I did with George Gammon. Go check it out. George and I are really on the same page in many, many ways with regard to what's going on with the Fed and the market and interest rates and yields and everything. So again, go to George Gammon's channel and have a listen to the interview we did. It's definitely worth listening to. Okay, so look, in summary here, just real quick, we got, again, absolutely abysmal economic news, and it's not going to stop. The worse the economic news is, the higher the stock market is going to go, because it means to the market and to traders like myself, my lions out here, and stackers and people that hold cryptos, that the Fed is not done. It's just a promise. Yet again, the Fed is going to backstop everything. They're going to buy it all. The market loves it. It gets all giddy, orgasmic, hyper, and that's it. It's unbelievable. It really is. So with that said, we know what to do. We are just clear as a bell on what we need to do. We know where all the opportunities are, people. And it's not going to change. The opportunities are everywhere. Bet against this debt, become your own central bank, hold hard assets, physical silver, my favorite of all time. I'm going to keep telling you that. Cryptocurrencies, in my view, you must have these in your portfolio. And I'll say that again too. Unless they decide to regulate this stuff, cryptos are going much higher. The stock market, much higher too. Again, let me cover that again, just real quick. The Federal Reserve is already testing or experimenting with yield curve control. I'm convinced of it regarding the 10-year yield. They want to control the whole yield curve. Not only that, they want to institute a new version of Operation Twist. They're going to do these things, and the market is going to love it. It's going to love it, and then we're going to get that multiple expansion I've been explaining to you for a very, very long time. Multiple expansion meaning investors, because they're retarded, are going to be willing to pay more to own a share of stock. Boom, up goes the stock market. You understand? And this mechanism here will continue until it doesn't. That's all we know. We don't know when it's going to stop. We just know the worse the economic news is, the more the Fed's going to do. By design, the Fed has killed the global economy, shut down the money velocity so they can inflate along with the other central banks. You understand? This is a global takeover, people. Open your eyes and realize what's going on around you. Really. Don't be distracted by the nonsense and the propaganda. Oh yeah, our economy is on fire. Oh, let's see, productivity has gone negative. We got another 745,000 people every week. It's the same thing, applying for first-time unemployment benefits. If this is their version of an economy that's on fire, it's so strong, you can see how twisted the whole thing actually is. All right, look. Check out that interview I did with George. You're going to love it. And I will see all of you later on. It's just crazy. I'm out of here.